Alright, ladies and gentlemen, welcome back to the Simple Markets channel. Now, this video today might be a little bit different. It's probably going to be short and sweet. Now, outside of just our course content, we have a lot of different channels for things like data reviews, the lab, which is some backtesting data, questions that can be answered in a forum. But this one specifically is trading psychology. We have a lot of videos in here as well as different written topics like this. But this today is a story that I actually wrote myself called the 24-hour coin. And I'm actually going to be reading you guys this today, so let's not make it weird. If you're watching this before bed right now, take the headphones out, go to sleep, come back and watch this in the morning. But the 24-hour coin. Two traders are given a strange opportunity. A mysterious JB places a coin on a table and says, you can flip this coin as many times as you want for the next 24 hours, but the rules are simple. If the coin lands on heads, you will gain 1.5 R. If it lands on tails, you will lose -1 R. So essentially what this means, if it costs $100 to flip this coin, if the coin lands on heads, I will make $150. If the coin lands on tails, I will lose my $100. Of course, this is a normal coin. It is perfectly fair, 50% heads, 50% tails, but there is one catch. After the 24 hours, the coin will disappear forever. So we're going to talk about two different traders here. Now, trader A. This trader is what we consider, honestly, most traders out there probably watching this video, and that is chasing win rate. Both traders start the same exact way. They each flip the coin 10 times, and they each get 8 tails and 2 heads. The results are pretty rough. It is unlucky, but it is not crazy. With a fair coin and a 50% chance of head or tails, getting 8 or more tails out of 10 flips happens about 5.5% of the time, so roughly 1 in 18 traders will experience this at some point when flipping the coin. Trader A starts thinking, if this coin is already profitable at 50-50, imagine how much more I could make if I could increase that win rate. So instead of flipping more, he decides to optimize the flip and start studying. For the next 8 hours, he studies to perfect anything he can think of. This goes down to the wind direction when the coin is flipping in the air. It comes down to his actual technique and how he's going to flip the coin. How fast does he want the coin to rotate in the air if he can try and time it to get it on heads or tails? Just that minor shift in win rate could be huge for him in the long run and he can make more profit. Eventually, he comes back after all his studying and practice and flips the coin 20 more times. And the results, unfortunately, still are not great again. He gets 12 tails and 8 heads. So for those of you not mathematically following along, he is actually down -5 risk to reward right now after his first 30 flips. Not the best scenario for him, but you know what? He's going to figure this out. Again, completely normal for a coin. Now he's even more convinced he needs to improve his technique. So he spends another 12 hours experimenting. I know 12 hours sounds like a lot, but for some of you out there, you are on the same strategy for 6 months plus, if not a year now, using that same strategy, trying to perfect this. So keep this in mind. By the time he returns after all his studying, all his optimizations, his back testing, there are only 2 hours left, and this is his crunch time. He is going to spam flip this coin as much as humanly possible in those 2 hours. He flips the coin as fast as he can, about 500 flips per hour, managing 1,000 flips. So his total flips for the day, his first session was 10, his second was 20, and then that last 2-hour push was 1,000 flips. So he flipped the coin 1,030 times. Now, trader B. These are the traders in simple markets who trust their edge, and they have the exact same start. His first 10 flips were also 8 tails and 2 heads, but his reaction was different. Instead of trying to improve the coin, he trusted the rules that were already in front of him. He understood, mathematically speaking, if the coin was 50-50 and the payout was 1.5 R when he wins and -1 R when he loses, he understood that this means every flip has a positive expected value. Some of you may have heard the term EV, that is what that means, expected value. So this means the expected value per flip is positive 0.25 RR. Each flip is worth 0.25 R on average, but only over many repetitions. So trader B does the only thing that matters. He flips the coin all day. He flips 500 times per hour, which is the same speed as the other trader when going full speed, for 24 hours in total. Trader B flips the coin 12,000 times. He does not stop. He doesn't take a break. He does not care about the losing periods. That first 30 flips, he got the same result as trader A, where he was already down -5 R. He kept going and kept going. And the result? Trader A makes about 257 RR, while trader B makes 3,000 RR in the same 24-hour period. Now keep in mind, both are very positive here, but in most scenarios when it is not 500 to multiple thousands of trade scenarios, Trader A in most cases would actually be negative, for example, the first 30 trades that we saw in the beginning, compared to Trader B, who would be highly positive based on that same period of time by taking more trades and focusing on repetitions over win rate. Trader B didn't need a higher win rate, he just needed more repetitions on the same exact edge. And here's just the lesson or takeaway. Most traders already have their coin, even you watching. If you don't have the simple market strategy, there's your coin right there. You can go and use that one, which has a positive expected value. Or some of you out there may have your own strategy that probably does work or have a long-term profitable edge. You just haven't practiced it, backtested it enough, or put in the repetitions that you need. You may be out there focused on continuously optimizing it, adding new rules, or avoiding losses, which is a huge negative for traders. Do not try to avoid losses. Instead of executing it, they start acting like Trader A. They hit a losing streak, immediately assume something is wrong. They start tweaking the system, searching for new concepts, or trying to eliminate their losses altogether. In reality, they're just doing what Trader A did, spending time trying to improve the coin instead of flipping it. Trader B understood something most traders struggle with, which is a profitable edge only works if you execute it repeatedly. Your win rate may not look impressive, it might not be flashy like the ones you see on social media, but if your system has a real edge, the only thing standing between you and profitability is repetition and discipline. But the most important thing to understand is that I am not special. I don't have a special system. I didn't discover the secret to the markets. If there was one, this is it. The secret is that you need to continuously trust your system, backtest it, gain confidence in it, and trade that edge for as long as you can, keeping your repetitions high, and you will see profitability. Could I sit here and every time I take a loss, jot that down and start having a huge notebook that tells me I would be much better off taking trades in discount or premium, or I would be much better off if the daily time frame wasn't in some sort of supplier demand zone or order block on the higher time frame? My entries would have much higher RR if I entered off the fair value gaps or the IFVGs instead of taking the 75 fib. There's infinite tweaks, modifications, and additions to a strategy that you can make, but you will never find peace in your trading if that is all you do. All the time I get traders who ask me, JB, I saw you took a loss on GBP JPY, but there was clearly an order block on the higher time frame that we were inside of. Did you pay attention to that? And my answer is no, I didn't, because I just take the system that I have. I know it works in the long run. I continue to execute it and trust that edge. And that is why I am profitable in making the money I want in trading compared to some of you out there who may not be. Like I said, I'm not special. I just have a different philosophy towards trading. And I hope some of you out there can listen to this and maybe make the shift yourself, or at least attempt to make that mental shift yourself. Stop trying to avoid every loss. Stop searching for endless new strategies and concepts on YouTube. Test a system until you know it is profitable. Understand the probabilities behind it, and then commit to executing it over and over again. Push through those losing streaks, ignore the noise. The traders who succeed aren't the ones with the most perfect or optimized systems. They're the ones who are willing to keep flipping the coin. Now, circling back to some of the ideas in that, this is our main chat now. I asked a poll question here, which everybody unanimously got correct. But Paul Tudor Jones, who is arguably one of the best macro traders in history, had a 35% win rate, right around what we do at about 34%. You do not need the 75%, 80% win rate strategies that smart money claims to have. And honestly, if you look at our break-even rule as well, it kind of drags that win rate up higher to about that 58% level. But the next thing here that's important to realize is I said, traders, I want to hear everyone's returns for how they closed out March of 2026. March was honestly not that great of a month for me. I still returned really well towards the end there due to one last winner on USD JPY. But otherwise, it was a pretty slow month for the amount of trades that I took, and also the last week there was pretty slow. But I am not afraid of the answers here because I love this community and the traders that are in it. They're very open, they're honest, and they are some killers. But we have Alex here with 15 trades and 0 RR, but he has 3 running and 6 unrealized gains, which means he's positive 6R on his PNL right now, despite a 9 trade losing streak. Circling back to that coin scenario, he understands that a 9 trade losing streak is very unlucky and it's difficult to deal with. But he continues trading and he has 6 RR in profit and PNL running in the same 1 month scenario. He continued taking more and more trades, all of the setups that presented, and he's once again being rewarded for it. Roshan with 5 R in a total of 20 R for 2026. Another 13 trades in March here, a negative 2 R, but 26 RR for the year. 30 trades in March, 7 RR, and another 30 R for the year. Negative 3 R for March, but once again 15 R total for the year. We have another 16 trades and 2R in March and 61 trades with 27 RR for the year. Mind you, anybody with this yellow name here is over $10,000 in payouts with firms. Anybody with an orange name is funded with firms. 19R for the year here. Lucas with 29R for the year. Kyle with 5 RR in March despite an 8 trade losing streak, the same amount of losing trades we saw in the coin flip scenario. 3 people in chat here with over $10,000 in prop firm payouts. March ended in -4R for him, but he had a 14 trade losing streak, meaning he made back 10R of those losses just within that 1 month time frame. And knowing Shamden, he's going to be back with 20R next month, so it doesn't matter. Simon here with 18 RR this year. Hey, first of all, I wanted to thank the coaches for creating simple markets, struggling from 2 years in trading now, finally making profit in trading, and he has some questions about prop firms, and his goal is to acquire 1 million in capital, suggest the right way and how to manage accounts. I cannot stress enough how proud it makes me when I see people sending their payout certificates, especially when there's someone I can tell has come to me so motivated. I'm helping them in DMs and giving them as much advice as I can, and then a month or 2 down the line, they start sending payout certificates, and now Tomas is allocated with, I think, $800,000 in capital with different firms, which is unreal. Honestly, this video went on a bit longer than I expected it to. You guys can probably tell how passionate I am about this topic. But as always, thank you all for watching. I appreciate it. Subscribe to the channel if you have not already, and I will see you all in next Monday's video.